Change is inevitable, but that does not mean that everyone likes it. In fact, most people don't. And change in the housing market means different things for different people. It really depends on if you're a buyer or a seller. But here's the good news. No matter which side you're on, change does not always have to be bad. Okay, it might suck for a little bit, but once you're through it, you can usually admit that you've learned a valuable lesson or it wasn't that bad. So let's talk about it. We're gonna start at the national level and then dive into Phoenix, so hang with me. I'm Shawn Shackelton, your resource for all things Phoenix and Scottsdale real estate. Recently in the news, there has been a lot of talk about the housing market, interest rates, and inflation rising again. Now, because of this rising inflation again, there have been many articles that have been written that maybe the Fed is not going to cut rates this year, rather they might raise them again. This is all due to the inflation and the continued government spending. And we still have a debate going on of whether or not we are going to see a recession. And from what I can see, if you're an economist, your opinion is that we won't. But if you're on Wall Street, your opinion is that we will. Then we have the most recent jobs report that came out, which everyone has said is hotter than they expected, which means they anticipate seeing rates stay higher longer, which really is what a lot of people have been saying now for a while. If you really dive into that jobs report, what you will see is that many of those jobs that they claim have been these new jobs that have been created are part-time jobs. These are not jobs that will completely support somebody that is supporting a family. These are jobs that maybe kids have gotten or young adults, or sometimes they are someone that has a 9-to-5 job that needs to supplement their income because of inflation. Now, like I said, most have been saying that we are going to see rates stay higher longer, with a possible first rate cut coming in June, which has then been pushed out to July. However, with this most recent jobs report, many are saying that it's probably going to be pushed out even further. In an article in Housing Wire, they said this: at the end of 2023, many investors anticipated 6 rate cuts for the year. A few weeks ago, 3 cuts became the new expected norm. Now it's 2 or fewer cuts, and some experts, like former Treasury Secretary Lawrence Summers, have included a rate hike in their scenarios, although the likelihood of that remains low. In remarks made Tuesday in Washington, D.C., Federal Reserve Chair Jerome Powell said that multiple measures of inflation will need to move substantially towards 2% before it would be appropriate to ease policy. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. That means if people start to lose their jobs. Because if unemployment starts to rise, all bets are off. We will see interest rates come down. Now, the other way we could see mortgage rates come down is if the spread between the 30-year mortgage and the 10-year treasury come closer together. But right now, that spread is too far apart for that to happen. Now, when we take a look at what Phoenix's unemployment looks like, we are sitting at 3.2%, where the national average is sitting at 3.9%. And again, take that number with a grain of salt because of what we just talked about. Now, when we talk about how the overall Phoenix Scottsdale market is doing, we are still in a very slight seller's market, as you can see when we look at the Cromford Market Index. If you are new here, anything over 110 means we're in a seller's market. Anything below 90 means we're in a buyer's market, and that in-between space means we're in a balanced market. And as of a few days ago, we were at 111.5. Then we have to look at our overall supply and demand, because this gives us some other really good information. And our demand right now is pretty flat, and our supply is increasing. But let's just take a look at our supply and demand from this year versus last year. And it's really the supply that is the most different. The demand is only about 3.3% different than we were last year, which is not that great. And it's really only because of the interest rates, which means that people are still buying. But for anyone out there that thinks that we are in the same position or heading for the same position that we were in 2008, you can see here in this chart what the difference looks like. Sellers, this is really important information for you to know, because guess who knows it? The buyers. This signals to them that they are going to have more to choose from, and more choices gives them more options. So if your home needs a little bit of work, then my suggestion is get that done now. Quick side story. I was showing a client of mine a house. We walked inside and the features were really nice. The house was very, very well done. We then went outside, and again, they loved the backyard. There were a lot of things that they really liked. They looked at me, kind of giving me that eye like, kind of like this one. I've told them not to talk too much in case there's cameras around. Anyway, we started looking at the stucco on the back of the house. And that back patio stucco, where the stucco wall meets that patio, there was a huge gap and a big crack above that. Then we looked along the side of the house. Same thing, right at the same area. And we started kind of looking at one another going, These were not just the regular kind of hairline stucco cracks that you see that are normal. Well, all of this made my client think twice about the house. We walked outside, got away from the house a little farther to talk, and they said, God, we really like that house, but those stucco cracks in the back really kind of give us pause. We don't love that. What do you think? I said, well, let me call the agent and I'll have that conversation with her. So I did. I called the agent. I had the conversation. I said, I want to give you a little bit of feedback and let you know my clients really kind of like the house, but those cracks in the back, I don't know if you saw them. She said, oh yeah, I did. I said, you know what? I think if it weren't for those cracks, my client would really think twice about maybe making an offer on this house, but it's really kind of put them off and they just don't really understand it. She then says to me, oh, don't worry about it. My seller, it works for the builder, so it's really easy for him to get those fixed. Guys, that's the kind of stuff you have to get fixed right away, especially in a market like this. See, the reality is that buyers don't want to see things like this. It makes them feel as if the home maybe hasn't been maintained very well, even if that's not the case. So sellers, make sure you take a look at your house, and your agent should be looking at your house through the lens of the buyer, so that you can really know what to fix, know how to present your house in the best light possible, because that's going to make the difference between leaving money on the table or not. And that's just one example of a buyer passing on a house because the seller didn't do some maintenance that they probably should have done before the house went on the market. But just that alone was enough for them to say, on to the next house. All that to say, homes right now that are well cared for, maintained, updated, in great locations and in great neighborhoods are still getting a lot of attention, and some are getting multiple offers. I have another buyer, same situation. We found a house, they loved it. It was the first day on the market. We had to beat out 5 other offers and go over the list price for them to secure it. So this is where, as a seller or a buyer, the agent you're working with can really make or break your negotiations if they don't truly understand how the market is moving. Now, just because our market is moving more towards a balanced market does not mean that we are going to start seeing prices come down, even with interest rates rising. When we get into a balanced market, we do not usually see any crazy bold movements when it comes to pricing. That changes as supply and demand changes, which in this case would mean that our supply would have to drastically increase or our demand would have to fall off a cliff. Then we would start seeing prices change. Now, I know many that are tracking homes online are gonna say to me, but I see all these price decreases, so something's going on. And yes, there are homes that are doing price reductions. But here's a chart to show you what those price reductions really look like and put it in perspective over the past few years. You can see that we are nowhere near what the price reductions look like in 2022. And the rates then were not as high as they are now. Now, that time is when our market started shifting from the absolute craziness, but this will show you what our prices have done since then. They have come back up, and we have almost made back every gain that we lost back in 2022. At the time of me filming this, we are in what's considered our high season. And the number of sales that we're seeing right now is down, but that is directly tied to the interest rate, which is also why everyone continues to say that when interest rates come down, the pent-up demand that we know is there is going to get buyers out of that paused waiting position and back into buying, which will very likely have a big effect on the pricing. The big question that everyone wishes someone could answer is, when will interest rates come down? And unfortunately, that's one that no one can answer. What we also have here in the Phoenix market is very optimistic new home construction builders. They don't have a lot of resale homes to compete with. They also have the ability to create incentives to give buyers rate buydowns to get them into homes. The number of new homes that have sold this year is more than we've seen since the Cromford Report has been tracking this, which was back in 2011. And our year is not over. So why are they so optimistic? The Phoenix market has more economic corridors coming, which leads to more growth, which means more homes will be needed. Now, the city is growing out because some of the cities that are closer in, they don't have any more land to develop, which means that those cities, that land, and those homes will become more and more valuable over time. And if you want to hedge your bets against inflation, the absolute best thing for you to do is buy a home. Now, I say this, and I only mean that for those that can actually afford it. I am not a proponent of being house poor. So if you can't afford it right now, then wait. But if you can, and that means that you have to buy a smaller home than you would like, then I would still do it. Because buying that home is only gonna help you in the long run. Now, if you're thinking of moving to the Scottsdale area and you'd like to know what it's like to live here, make sure you take a look at this video. As always, I thank you for watching, and I'll see you next time.